All right, what's going on, guys? Jeff here. Today's Monday, and I'm finally COVID negative. Like right here, COVID negative. I'm not sure if you can see it. One line. So I want to on and out about with my work and such. Anyway, first day of the week after a long holiday as well, a long weekend. Of course, a lot of things actually did happen throughout the weekend. I have a new video on my channel talking about how Twitter actually have the whole situation with what Elon Musk actually went through with Twitter. But of course, that was being uploaded on Saturday, where also on Saturday, after the video was uploaded, we actually have new revelation from Twitter as well. Speaking about how a poison pill will be actually taken by Twitter. And for people who don't know what a poison pill is, I will actually explain that more in the news later on. But anyway, without further ado, let's cover some news today. All right, so similarly, my voice is still not exactly 100% back. So, please bear with me a little bit. All right, anyway, let's start with this. Twitter adopts a poison pill to block Elon Musk from increasing stake. All right, so for people who don't know what a poison pill is, okay, a poison pill was actually being implemented and also being popularized by someone, I think, back in 1980s, around 1980s or so. And in layman term, what a poison pill basically means is, like how a poison pill is. Whoever who takes the poison pill is going to get hurt, and everyone's going to get hurt alongside with it. Okay, so if Twitter were to swallow the poison pill, of course, Elon Musk, all the shareholders, the actual board of directors who actually have shares in Twitter, all of them are going to be, poisoned to a certain extent. So how this actually works is that if anyone in the entire board of Twitter, okay, anyone who wants to buy more than 15% of Twitter will eventually cause a chain reaction for anyone who hold any shares of a Twitter to have the right to buy another Twitter at half price off. Okay, so for example, if I personally, if I own 100 shares of Twitter, okay, and if Elon Musk eventually buy 15% of the company, okay, that's going to trigger the fact that I can now buy another 100 Twitter shares at half the price. And let's just say, for example, right now, Twitter's price is a little bit higher. Okay, now it's about $46. Okay, so the half price would be $23 at $23. Okay, so if I have 100 shares, and if today Elon Musk basically buys in 15% share of Twitter, I am now given the right to buy another 100 shares at $23 per share. So I'm only given the right to do so. It's essentially like an option for me to actually buy into Twitter. And if I were to do that, okay, that's just going to dilute everyone's share accordingly. Okay, whoever who have shares might want to buy more shares will just eventually just dilute and dilute and dilute. That way, Elon Musk shares, be it 15%, even if he were to just buy an additional 15 more percent, it is still not going to work out because everyone else is also buying more. Okay, so this is a method for them to actually stop Elon Musk from taking over the whole entire company, to kind of stop like a hostile takeover. Not really the best way, because I do think, honestly speaking, I think Twitter is just kind of delaying the inevitable. Because if they were to do this, true, Elon Musk might not be able to take over the company, but now no one's going to be able to take over the company, even if one day that they want to sell the company at another price is just going to be a whole nother thing. Because right now, if they are actually opening this up to the public via a poison pill, it simply means that if anyone else were to actually give a valid offer, would also have to go through the whole poison pill. So kind of iffy on that part with the poison pill and such. And honestly speaking, I think that they are also talking about how another company might also want to be buying over Twitter. I'm not sure at what valuation, but whatever it is, I do think that Elon Musk is giving a very, very fair valuation. I'm not sure what Twitter thinks they're actually worth. It's true that they are a growth level company, so you could say that Twitter can easily be worth $70, $80, or even $100 in 2 years' time. But of course, right now, no one is actually certain of where Twitter is actually supposed to be. And as of last, we actually know that Twitter is only worth $30 according to Goldman Sachs, which is also coincidentally the one who are actually helping Twitter with this current case against Elon Musk. So of course, them saying that Twitter is not worth $30, not worth $54.20, seems a little bit suspicious. But yes, so that's basically the point of the whole poison pill. But now that you get the whole context of it, let's continue with the news. All right, so over here, basically, significantly increasing his stake a day after he unveiled, his $43 billion unsolicited takeover bid for the social media company. Okay, so the poison pill makes it difficult for him to increase his stakes beyond 15%. Okay, so yeah, poison pill, blah, 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 blah. Okay, over here. So all other shareholders would gain the right to purchase additional shares for what would effectively be half priced. So this would then dilute Elon Musk's stake and make it make buying more shares even more expensive. Okay, the pill's exact details of which Twitter said it will provide in an upcoming filing remains in effect for roughly a year. So yeah. And the reason why it makes it even harder for him to buy is because everyone is able to buy it at a cheaper price. But if he have already 15% of it, he's not able to just buy more than an additional 15%. He can only buy an additional 15%, which would then eventually be diluted by everyone buying as well. So eventually he will kind of be going down in terms of his shareholder. If anything, if he do hit 15%, you eventually go down to about 8% or so. That's how the math kind of work out a little bit. All right, so Twitter said in a statement that the right plan doesn't prevent the company from engaging with potential acquirers or accepting a takeover bid if the board determines it is in the best interest of the shareholders, which honestly speaking, I'm not sure if they're actually talking, I'm not sure if they're actually saying the correct things, because if you're talking about the best interest of shareholders probably would think that $54.20 per share is a very, very valid offer. And I'm very, very surprised that Twitter is not really taking this seriously. Because if Twitter is actually taking this offer seriously, I would imagine that Twitter would actually come up with a counter offer, be it at $69.20 maybe, or $75, or something along that line. I do think that if Twitter is actually serious about this whole entire thing, where they actually have the best interest in mind for the shareholders, I do think that a counter offer should actually be, to be given. As much as Elon did say that this is the best and final offer, I do think that that's a very basic sales speech where everyone do this sales speech. Okay, if you're in the sales sector, chances are people like to always throw out the word, "This is my best and final price," and such. I got no more discounts for you. There's no more sales. There's nothing else I can do for you. But at the end of the day, a counter is a counter, and a counter needs to be addressed. And I think that because Twitter did not even bother to give any form of a counteroffer to Elon Musk, I do think that chances are they are not really interested in doing any form of a takeover bid, an acquisition deal, nothing of that sort. They just refuse to let Elon go through with a hostile takeover. So I'm not sure how that's going to turn out. So anyway, Mr. Musk may not be the only suitor for the company, as people familiar with the matter say that Thoma Bravo LP and other private equity firms are now circling as well. So of course, similarly, if we are talking about Thoma Bravo, if we are talking about any other private equity firms, we need to listen to the price, okay? Because I'm pretty sure that any of these companies are not going to be offering $54.20 per share. Right now, it is $46, okay? So we just do $46 divided by, $54.20 minus $46.30 is $7 extra. So $7 divided by 46.3 is currently at a 17% premium from today's price. 17% premium from today's price. Okay, and from whatever Elon Musk actually started buying in back in 28th of January, it's almost 54% increase in the premium. Okay, so I'm not sure what Thoma Bravo or any of the other private equity firms, I'm not sure how much are they actually offering, but 70% premium is a lot. Okay, as how we have actually studied all the other past acquisition deal, be it for Warren Buffett, for Cathie Woods, or whatever it is. Okay, all this sort of acquisition deal, I've never heard of people doing a 17% premium increment. Of course, for 17% premium increment, chances are they are actually changing the entire business model. And for this, Elon is not even changing the whole entire business model. He's basically buying in to the company and changing it to private. They're going to take it off the public market. And that's why I don't really see it as a money move for Elon Musk. And I always say it before, Elon is not motivated by money. And because he's not motivated by money, chances are a lot of things that he do might have some kind of a independent movement behind him. So I do think that he's not really motivated by money. And if it's not motivated by money, I do think that this would be a lot better than passing it over to any other just private equity firm where they are most likely going to be motivated by money. And then you're just going to see a lot of weird things happening to Twitter, be it Twitter Blue increasing in price, more ads, things of that nature. I do think that there will be a lot more bad than good when it comes down to being acquired by any other companies. All right, so let's see. The private equity firm, which specializes in the technology sector and manages roughly $100 billion, have been busy lately at a time of the heightened buyout activity. It agreed to buy Anaplan at $10.7 billion in March, SailPoint Technology just days ago for $6.1 billion. So honestly speaking, you're talking about 10.7 billion, you're talking about 6.1 billion. I really don't think that you are going to come in swooping with a $45 billion deal for Twitter either. So honestly speaking, I'm not sure how are they going to actually come in with that amount of money. So yeah. All right. Anyway, let's move on to the next news, which is Elon Musk, content censorship, not abuse, is Twitter's problem. This actually talks more about the problem that's within Twitter, not for the poison pill. Okay, because Twitter needs to be transformed as a private company. And, of course, they are just talking about how in the past, what Elon Musk actually had to go through. Over here, they say, if in doubt, let the speech, let it exist. So what they're actually talking about here is more like for the whole point of free speech, the reason why Twitter is kind of going down the path of anti-free speech, where they're actually controlling people's freedom of speech, basically, such as banning Donald Trump, or for them to actually ban some things that should actually be on the platform. Of course, we're not talking about your murders, your kidnapping cases, your gorish post-18 nudity, or whatever it is. All those things are not supposed to be on Twitter, or at least supposed to be guarded away from the people who are underage. That's fair enough. But if you're talking about freedom of speech, people who have the free reign for them to actually express themselves. And Twitter is not exactly doing the best job of it. Of course, a lot of people tend to beg to differ, where they actually think that Twitter is actually doing quite a good job. But of course, Elon Musk himself think that, there's a lot of censorship actually going on here. And of course, that's why he say, if in doubt, let the speech, let it exist. And I do think that that's fair. Okay, of course, for someone who is a Singaporean, we don't really believe in freedom of speech as much as Americans, because we don't believe in the Fifth Amendment as much. But of course, we do have to also take into account that Twitter is ultimately a US company. Of course, it's a public listed company as well. So, of course, anyone could be a shareholder from any other countries. But, ultimately, I do think that what Elon Musk is actually talking about, free speech for Twitter, does make sense to a certain extent. And even now, I'm still a little bit tilted that, Donald Trump got banned from Twitter. Because I do, as much as I dislike his tweets and such, but I still think that his input and his feedback as a political leader makes a lot of sense. Okay, as much as he do say a lot of stupid things, but of course I do think that his feedback is very, very important as well. And that's why I think that censorship is very, very dangerous. It's a very, very fine line where you start to say, yeah, maybe we don't include this, and that's kind of just basically going on the verge of censorship as it is. All right. So anyway, next news. All right, so Rivian CEO warns of a looming electric vehicle battery shortages. So, of course, I think that this is going to be tied down to your nickel and such. First of all, nickel from the whole Russia-Ukraine situation, that's one huge issue. Next thing, we're actually talking about supply chain. Okay, if Rivian, the CEO, is talking about the possibility of electric vehicle battery shortages, which I already see it as a very evident thing that is going to be happening. Okay, on the 20th of April, which is 2 days from now, Tesla is going to be going through their earnings report as well. And I think that will be very, very important for us to actually go through that as well, because the thing is that chances are there might be some form of some paragraph in that earnings report to actually tell us, to actually let us know that, maybe the battery shortages is also affecting Tesla to a certain extent. And I do see Tesla as the leader of this entire industry. And if Tesla is going to be affected, high chance that a lot of other EV makers are going to be affected, be it your Lucid, your NIO, your XPeng and such. All of them, I do think that there's going to be some form of a residual impact and pressure going on to the other companies as well. So yes, I think that this is also very, very important for us to really look into for Rivian. Okay, as much as I do not like Rivian as a company as it is, but I do think that the challenges that they face is also very, very viable. Okay, so over here they're talking about how a challenge that he said could surpass the current computer chips. Okay, because right now we are having a computer chip shortages. Right now, these shortages might be more towards battery supplies, and that might be even worse than the computer chip shortage that we have back in 2021. So that's going to be an even bigger issue. So of course, right now I think that this even getting even worse because right now we are entering a bearish market, and of course with supply chains being a huge pressure, a huge supply chain pressure. Okay, and let's not forget hyperinflation is still on the run. Okay, we still have 8.5% inflation year over year, but let's not forget that core inflation is actually kind of going down. But of course, that's for an inner inflation video as well. All right, so anyway, over here we're also talking about the semiconductor shortages that is disrupting the auto industry. Was a relatively small supply-demand imbalance that then led to aggressive overbuying and stockpiling, putting the car sector in a difficult position as it is now. Okay, so batteries right now is expected to be an order of magnitude worse. So yeah, I do think that batteries is going to be a very, very scary one. Like palladium and nickel, I have always been talking about this too, which is very, very important factors in your batteries making. So I do think that, of course, to a certain extent, Russia-Ukraine definitely did affect these two separate things. But something that might be interesting from this news is that we might actually start to look at the commodities for nickel and palladium. I do think that there might be some form of a move in terms of those commodities as well. All right, next up. We have China's economy growing 4.8% in first quarter, beating expectations. So that is actually quite big because for us, actually, for China, for this past quarter, we actually been hearing Beijing, Shanghai, Shenzhen, all of them are actually going through lockdowns. Okay, China have been locking down cities that is 3 times bigger than New York. Okay, this is actually very, very serious. But even then, for the first quarter, China economy grew 4.8%. But of course, at the same time, you also have to take into consideration the previous quarter and the quarter previous to that. Okay, we had the huge Evergrande situation. And that's why a lot of them were actually having a lot of downward pressure. And right now, anything that came out from a very, very low expectation would easily be easy to beat for us right now. So I do think that this current the beating of expectation for the Chinese market might be good, but at the same time, I don't think that it's fabulous to the point where you might think that the market is very, very happy about it. I highly doubt it. I don't think that the market is being euphoric either. Okay, getting 4.8% sounds good and all, but I don't think that it is the best that they can do. Okay, so over here, China economy accelerated in the first quarter of the year, even as lockdowns closed factory. So that's why I'm thinking that I think that the whole lockdown would definitely be a big issue for would definitely be a big talking point for a lot of them, because I do think that the lockdowns definitely play a huge part in this whole entire thing as well. All right, so China gross domestic product expanded by an annual 4.8% in the first quarter. China National Bureau of Statistics said Monday a faster pace than the 4% expansion recorded in the final 3 months of 2021, and the 4.6% expansion predicted by economists is polled by the Wall Street Journal. So of course we were expecting 4.6%, and of course getting 4.8% is definitely a beat. But ultimately, like I said before, I don't think that this beat is going to be that big of a deal. A lot of us do expect some form of beat, and even for GDP wise, getting 4.8% for one quarter is definitely a very, very good thing. But of course, we have to also take into context and also take into consideration of what actually happened in the last quarter of 2021 and also the third quarter of 2021, where we actually see a lot of pressure from everywhere, be it your regulation, your Evergrande situation, real estate, businesses getting affected, regulatory concerns with companies who are being listed outside of China, which is also we also have a news for Didi later on as well. So yeah, super duper crazy for the whole of China for the third and fourth quarter of 2021. So naturally, I think that for the first quarter of 2022, we definitely would like to see some form of a beating of expectation of some sort. All right, now anyway, next up, let's talk about Russia-Ukraine, where 7 killed in a Russian missile striking Ukraine's Lviv, which this actually just came out I think about in the last hour or so. And yeah, they're actually talking about civilian death now. And like I said before, I don't think that this is a very good thing for us to really talk about. But of course, for me, I just want to be able to report to you guys the news as I see it as well, and of course my opinion on the news and such. So I do think that this is starting to. I mean, like, I don't think that I don't think anyone is doubting that this is starting to become more like an occupation. I do think that we are all quite aware and quite conscious about the fact that this is eventually turning into an occupation from the Russia's point of view as well. But I'm not sure how long would Ukraine be able to last for this entire situation. Over here you can see 7 people killed, several injured in the Russian missile strike on the western Ukrainian city of Lviv. The local Ukrainian authorities said shuttering the calm in the place that has remained mostly unharmed in the war. I feel that, same thing, man. Like, not war advice. I feel that Zelensky should probably just give up on Donbass and just continue as it is. But I'm not sure if Russia is gonna take it down either. Even Mariupol is also going through some civilian attacks by the Russian missiles as well. So yeah, a lot of things is happening. So I do think that it's going to be a little bit hard. All right, but anyway, let's move on to the financial side of things again. All right, so Didi global sinks on delisting plans and wider quarterly losses. Shareholders sets to vote on delisting plans on 23rd of May. It won't apply to sell shares on on another exchange before this. So this is quite huge for Didi because first of all, the first time that Didi was being IPO'd was last year in US. I think that it actually went up to about $20 or so after the whole bear market, and of course with regulatory attack and such. Didi actually eventually went down to about $4 or so. I'm not sure how much is Didi at the moment. Let me just check. Didi is now $2. Didi is now $2. The 52-week high, they were at $18. So yeah, pretty bad. This is pretty bad. But yeah, of course, like over here, they say that tumbled down in the US. Man, right now it's $1.99. It's horrible. 20% down actually. They are planning to delist its US traded shares before it finds a new venue for the stock. The company also reported that its quarterly loss almost doubled. Okay, the American depository receipts sank as much as 24% to $1.88 in early trading after Didi set an extraordinary general meeting for May 23rd to vote on delisting its shares from the New York Stock Exchange. So yeah, of course, when it comes to any sort of listed company, delisting always sets some contingent for a fear because that's where most of the investors would lose their money. And of course, similar to how Twitter is like. Okay, of course, Twitter right now is actually going up because with the poison pill, it simply means that the chances of Elon Musk actually going through with a hostile takeover is a lot lesser now. Okay, for Elon Musk to actually now take over Twitter and then delist the entire Twitter Incorporated, for him to do that, he need to spend a lot more money. And for him to actually do that, it's going to be very, very hard. And yeah, which is why the things that Twitter is kind of going up because chances are they think that Elon is not going to take over Twitter. And also because Elon did teased a plan B if this actually doesn't work out. And honestly speaking, for my own personal thought, I do think that his plan B is most likely going to be him creating his own social media platform. And I do think that if he were to create his own social media platform, first of all, it's definitely going to be private. It's going to be another SpaceX sort of thing where you just go through an angel round of investor for those angel investors and such. And from there on out, then he can just create this whole entire company. And of course, let's be honest, chances are he might not even need any sort of investors because he's already the richest man on earth anyway. So I do think that that's going to be some form of calibration for us to actually see a possibility for us to really see a new social media platform out there sometimes in the future. So yeah, although investors were well aware that Didi Global intended to delist, the manner of delisting has taken investors aback. Okay, because Didi was actually meant to delist late 2021. Especially when China started to do a lot of those regulation attack and such. But then, of course, everything was actually being stopped and such. But right now, Didi is finally, going through with a general meeting to vote for the delisting of its share. And honestly speaking, looking at how the price is actually going down by 19% in the pre-market, I would like to think that the chances of the delisting happening is very, very high. So honestly speaking, I don't think I'm going to be going anywhere near DD for the time being until, hopefully we do see any form of a justification for us to really get back into DD again, which I really don't see that happening anytime soon. All right, anyway, next up. Bitcoin falls to the lowest in a month as risk aversion takes toll. Bitcoin dropped to its lowest level in more than a month as cryptocurrency continued to be hurt by investors' risk aversion amid signs of muted new interest in the coins. Okay, it fell by 4.2% to 38,000. Right now, I think it's about 39,000 from the last time I checked. Yeah, right now it's at 39,200. Of course, I do think that it's kind of like a flash crash downwards and then immediately getting bought up. Ether dropped 4.7%, declining to the lows of 2.9K as well. Okay, technical charts suggest that despite Bitcoin's recent drop, it's not close to an oversold reading, and near-term support at 35,000 likely won't hold. Technical analysis at 22V Research, we continue to believe that it will get to the $30,000 level. And like I said before, I do think that cryptocurrency is very, very volatile, to say the least. So, of course, if you're interested in investing in Bitcoin or cryptocurrency in general, first of all, use the link down in the description box below. As you can invest with Coinbase, you can invest with Gemini using my link down below. You get free $10 of Bitcoin. Why not? All right. But anyway, if you were to actually invest, in cryptocurrency, just make sure. Okay. Honestly, my own thought, don't go more than 15%. Personally, I went more than 15% and I got hurt a little bit. Of course, my 15% eventually turned into like about 9% or so. And of course, eventually my stocks also got hit quite hard, where it should kind of just balance out a little bit. But yeah, I do think that cryptocurrency is definitely still going to be very, very, it's still a risk asset as compared to your stocks, real estate and such. So of course, do invest safe. All right. So anyway, let's move on to the next one, which is Tesla Shanghai to enter a closed loop system with a worker sleeping in factory. So first of all, I'm pretty sure everyone know about Giga Shanghai. And, for Giga Shanghai, they are currently entering this closed loop because the thing is that in order for them to reduce the amount of lockdowns that's going to be happening, if people actually go home, people spread the virus, the virality increase and such like that, we do not want workers to actually, we don't want manpower to go down. And because of that, they're actually going through with a closed loop system where workers basically just sleep in the factory. Of course, it's not really that good, but employees get mattress, meals, and also a $63 a day stipend. Of course, I'm not saying that that's the best thing that the company can actually do for the employees, but of course, it's a little something. I'm pretty sure that there's going to be a lot of leftists that's going to be against this whole situation as well. All right, so the electric vehicle maker will provide each worker with a sleeping bag, a mattress. A memo sent to the employees and viewed by Bloomberg shows, given that there isn't any purpose-built dorm, people will be required to sleep on the floor in the designated area, and there will be other spaces allocated for showering, entertainment, and catering. So yeah, all employees will have to take a nucleic acid test daily for the first 3 days, have their temperature checked twice a day, and wash their hands 4 times a day, twice in the morning, twice again in the afternoon. Workers will be provided with 3 meals, allowance given about 400 yuan, which is $63 a day. Although the actual amount will depend on a person's position and level, one of the persons said. So far, more than 600 firms have restarted operation, including Quanta. Tesla told some of the employees on Friday to prepare to enter a closed loop system on April 17 after a weeks-long suspension as Shanghai attempted to contain the COVID outbreak. To bypass the current restriction on residential compounds in the city, the company issued a special certificate for those on call and arranged shuttle buses to bring them back to the plant. Of course, I do think that this is a very, very special case because if they actually allow a lot of this employee to actually go back, chances are they're going to spread this whole situation and make this whole thing even worse. Of course, keeping them in the factory, a lot of people might think that this is a little bit cruel, separating them from their families and such. But of course, I do think that to a certain extent, it's a little bit of a give and take. I do think that to a certain extent, Tesla definitely are also giving them the free choice where, if you want to, you can actually stay and these are the benefits. If not, you can just stay at home and you just will not be paid. And chances are a lot of them would most likely want to just stay in the factory instead. So yeah, I think that's about all that we actually have for today's news. And I think that I don't want to drag this out any longer. Right now it's almost at 30 minutes already as it is. But anyway, thank you so much for watching. And I will also post tomorrow. Okay, let's just check for the earnings, shall we? Because I think that today we don't really have any important earnings. Let's see. Today we have Bank of America, which I think was already reported with a 12% quarterly loss for profit. Okay, Charles Schwab's probably reported as well. But in terms of the others, I don't think there's anything important. I do think that tomorrow we'll definitely have Netflix and J&J. I think that's going to be interesting. On the 20th, will be Tesla, which is one of the most important one, I think. But yeah, anyway, I think that's all for today, and I'll see you guys.